Chinese economy is sputtering after roaring back to life after the post-COVID lockdown was eased. Practically every indicator we've seen in the last few weeks has been quite softish. Now, it's not that the economy has entirely lost growth momentum, but as you look across the board, especially to the key drivers of growth traditionally, both in investment in infrastructure in particular, but also real estate investment and household consumption, which had in recent years been playing a bigger part in driving growth. Both of those have remained quite weak. Industrial profits are coming in weak. And of course, the prospect of deflation, both in producer prices and possibly even in consumer prices, is raising real concerns, not just about where the economy is going, but whether policy tools are going to have traction to reverse this loss of momentum.
Well, I mean, you say sputtering and you talk about concern, but just explain for us.
Sorry to interrupt. Speaking of sputtering, we've got the Chai-Shin numbers coming through and it's in contractionary territory. We had seen over the course of the past couple of months that, that the Chai-Shin had been outperforming the official numbers, but this time the manufacturing came in at 49.2, so it's well below consensus of around, or came in below that 50.5 at the same time. We'll wait for any further ancillary details, but just at the top line, as you can see there, you're seeing that implicit reaction coming through for the yuan weakening considerably, so around about 40 pips on the back of that. So just initially, when you hear that 49.2, Professor, does it almost build the case that China is going to have to do something and in relatively short order, and not just talking about stimulus, but actually start with some deliverables?
Well, really, it's going to have to be a package that includes some short-term macroeconomic stimulus measures, but more importantly, some measures that can rebuild the private sector's confidence that the economy is going in the right direction. And that is the real challenge for the government right now. Because as you see all of these indicators softening, as we slip into near deflationary territory, some policies like monetary policy are not going to get that much traction. If you reduce interest rates when the household sector isn't really interested in spending that much, or the business sector in investing, that's not going to have much of a stimulative effect. Fiscal stimulus could likewise be saved to some extent rather than being spent or consumed. So the key question for the government is whether they can rebuild confidence in the private sector that the economy is headed in the right direction, that the government is going to support the private sector in terms of boosting economic activity, and that the government will do what it can to support small and medium enterprises.
So what do you